I am pleased to announce that the Government of Alberta has finalized an agreement with Calgary-based TC Energy Corporation to invest in the completion of the Keystone XL pipeline. The Government of Alberta is making a $1.5 billion equity investment in Keystone XL this year, along with a $6 billion loan guarantee next year.
I want to bring in Alberta Premier Jason Kenney. Hi, Premier Kenney. Thanks for joining us.
Good to be here.
Let me turn to that announcement that you're investing $1.5 billion in the Keystone pipeline and an additional $6 billion loan guarantee. I understand the benefits of the pipeline you just outlined in your press conference right before this interview, but it also comes on the heels of just a few days ago your government announcing approximately 20 to 25,000 layoffs of education support workers. What kind of message do you think that sends?
Well, in fact, that was a result of our closing the schools in this province on March the 16th. And so we can't pay to operate buses that are parked or to clean schools that are shut down, for example. We continue to pay teachers to teach online. But folks, yesterday our municipalities in this city laid off thousands of library workers and folks who normally work in rec centers that have been shut down as well. That's happening right across the economy, and it's difficult for everybody. So our heart goes out to everybody whose job has been suspended as a result of public health orders that were necessary to contain the spread of the virus. You know, I think that if there's a positive side for the folks in the government sector, like people who work in the schools, it's that there will be a job for them when things start up again post-pandemic. That is not necessarily the case for a lot of the people in the private sector who have been laid off as a result of the public health imperative.
Your government, though, and other governments are asking private employers to keep their employees on the payroll, right? I've heard so many politicians say that's the best way to sort of unfreeze the economy when this is all over. But your own government didn't do that.
Well, in fact, we have kept people on the payroll if they've had to go home for self-isolation. That's what I've called on employers to do, which is not to cut people's wages. In fact, we changed the Employment Standards Act here to allow folks to have wage protection if they have to take time off for self-isolation. But here's the reality, Vashi. We've had to shut down large swaths of the economy. Daycare workers were all let go. They don't get an automatic salary, and it shouldn't be an unfair situation for people who work in the government sector. It's unfortunate for everyone affected, but I don't think it's reasonable to expect people in the private sector who have been laid off because of the pandemic to pay for full salaries for people who have been laid off in the public sector. For example, contractors in the school bus system, when those buses are parked now, probably for months to come.
It's not just bus drivers, though, right? It's at least the unions are saying it's other people who are helping with some of that online learning. Is it totally accurate to say that these are people who were not working at all? Look, we consulted with school boards who actually came to us and said, what are the guidelines? We have all these folks on payroll who are not working. The teachers' assistants are there to help in the classroom. And the consultations we had with school superintendents and school boards, many of them indicated that they were going to lay these people off. That would have redounded as a savings to the school boards. We actually needed those resources to deal with the pandemic, and we've already invested nearly $10 billion of cash support and liquidity measures, deferrals, to support Albertans, households and employers through this crisis, in addition to increasing what was already the largest healthcare budget in Canada on a per capita basis. I take your point on that, Premier. I guess, though, that the savings that was announced with this move was $128 million. And I just wonder if I'm one of those people who now is out of work to save and to redirect that $128 million towards the fight for COVID, how I feel today while I listen to your government, and I'm not trying to take away from the potential economic impact of this pipeline in the future, but while your government is finding $7 billion for a pipeline, but can't find $128 million to keep those Albertans on the payroll.
Well, that's really not factual, Vashi. First of all, it's a $1.5 billion equity investment.
The balance is loan guarantees that will be from next year, so there's zero cash. The $1.5 billion equity investment is written up as an asset by the province. We actually believe that we will get a positive, profitable return on that when we sell those preferred shares following the completion of this project, which we estimate will generate a net $30 billion of additional tax and royalty revenues by increasing massively the amount of Alberta energy we ship to U.S. markets and increasing the price that we get for that energy. So, you know, I guess leaders at this point have a choice to make. They could focus only and exclusively on the day-to-day short-term crisis management, or they can also focus on the mid to long-term economic recovery. We've chosen to do both. We're fully engaged in the fight against the pandemic with massive resources available through our public health system and great work being done there. We have the highest incidence of testing per capita in the developed world. We're leading in many respects. But Vashti, please understand that here in Alberta, the economic impact is doubly hard, because not only do we have the COVID recession, we have an unprecedented collapse in energy prices. So where other provinces are seeing widespread layoffs, we're seeing that two times over with massive layoffs in our energy sector. We need an economic future if we're going to be able to pay for high quality education and healthcare. That's what this investment in Keystone XL is about.
Can I ask you, Premier, I'd like to ask you about the medium to long-term expectations where the pipeline is concerned and the market more largely, specifically on the pipeline. We know that there's an election coming down the road later this year in the United States. Are you concerned that that it won't even get built if there is a change in government there?
Well, no, we are confident that this will proceed. Earlier in the last year, before the U.S. primaries started, there were a number of Democratic candidates who had committed to abrogate the presidential permit for the Keystone XL to cross the Canada-U.S. border. The presumptive Democrat nominee, Mr. Biden, has clearly not done that, and so and moreover, what we're frankly trying to do, Vashti, is to create facts on the ground. So when voters go to the polls in the United States this November, there are going to be thousands of blue-collar union members, many of them, I'm sure, registered Democrats, in the field, building that pipeline. And secondly, Vashti, I think that the effort by OPEC and Russia to drive North American energy industry out of business right now through predatory dumping in the midst of the COVID recession will underscore for American voters and politicians, political leaders, how important North American energy independence is. So we're confident that people across, and I've been on the phone with Democrats and Republicans today in Washington and state governors with overwhelming support for this project and this investment.
I guess I just want to be clear, because it is a big chunk of change for Albertans, what kind of guarantees they have on the investment that your government is making. When we know, you're absolutely right, Mr. Biden has not explicitly signed that sort of petition that went out saying that if you sign it, you're against Keystone. Mr. Sanders did, it's my understanding. If in fact there is a change in government there, is there a guarantee that the money that Albertans invest into this project won't be squandered?
Well, let me just say that we've been in discussions with political leaders on both sides of the aisle in Washington. It's one of the reasons I was there in early February, and we are confident that the project will proceed. Is there a 100% guarantee of that? No, but we think it's a solid, absolutely solid project. And again, Americans have spent trillions of dollars providing a security guarantee to Middle East energy producers over the decades. Meanwhile, in the last few years, because of increased oil sands production and shale oil in the United States, North America has become a net energy exporter. I believe that both Democrats and Republicans right across the U.S. understand the importance of that, and I'm sure that Vice President Biden does as well.
Quickly, before I let you go, Premier, we've heard last week from Minister Morneau that help for the oil sector is coming in the following hours or days. We've had some indication from the Prime Minister that more is going to happen, but we don't have a specific timeline. Has the federal government conveyed to you when an announcement might be coming?
No, we've been hearing that time frame of hours and days for a couple of weeks. Don't mean to express frustration. We all have to show patience during these extraordinary times. All governments are doing a lot of big things simultaneously. We certainly are, and I know Ottawa is as well. We've been in daily, sometimes hourly contact with the federal government about the urgent situation facing Canada's largest industry subsector, oil and gas, our largest export industry, an industry that's responsible for the employment of about 800,000 Canadians directly and indirectly, and that has generated about 20% of Ottawa's revenues historically. So I think they understand that in Ottawa, that we cannot afford to allow our energy sector to be permanently damaged by this, in part by this Russia OPEC price war.
Okay, I'll leave it there. Premier Kenney, thanks for making time for us this evening. I appreciate it.
Thanks, Vashti.
The president of Suncor is joining us now, Mark Little. He's the president, and CEO. It's the world's largest producer of bitumen. Hi, Mr. Little. Nice to see you. Thanks for joining us.
Yeah, thanks for having me.
We know the spread of this virus has obviously had a huge public health impact. It's had a big economic impact, or already has, but is going to continue to have. The industry that your company, of course, is a part of is kind of taking a double whammy, not just from COVID-19, but also from the price war between Saudi Arabia and Russia. Correct me if I'm wrong. I think that your company announced last week that it was cutting back on its capital budget by about 25%. Can you sort of go over how you see the industry, and more particularly your company, impacted by all of that that's going on right now?
Yeah, this is a huge hit to the industry, as you can imagine. We've had some tough times dating back to very low prices in the fourth quarter of 2018, when we had all these pipeline logistics, which eventually led for the Alberta government to curtail production for the first time in literally 4 decades. So it's been a tough time for the industry. For pure producers, this is particularly challenging. The 2 advantages that Suncor, 2 or 3 advantages that Suncor has, is we have a very strong financial position coming into this. We're an integrated player, so we play through our Petro-Canada brand and being able to take it from crude right through to the end consumer. So we're involved in refining and distribution and the retail networks. And then just the talent and breadth of our talent and capability, our people are what makes Suncor great.
Beyond that, though, when you look at the prices that we're all waking up to every day and going to bed at night, how big of an issue, for example, might storage be? How worried are you about things like that?
I think storage is going to fill up in Canada, as it is going to be globally. So this is a huge hit to the industry. And quite frankly, like so many businesses, whether it's airlines, hotels, cruise lines and such, there's going to be help that's required. And a lot of the companies will struggle with liquidity. And so there's a lot of focus on trying to figure out, how do these companies keep moving forward? One of the first things we did was increase the liquidity of the company and get some additional credit lines to help us weather this storm.
Do you think there's a role for the federal government there?
Well, I think as the federal government's played in so many, these are such unprecedented circumstances, independent of the industry that you're in. It's hard to, there's a few industries where the demand is actually increased, but I would say the vast majority of them. Look at airlines, and you look at WestJet and Air Canada and such, and the huge hit, their demand is off just massively. So the government is stepping in to help various industries and various players survive this, so that we can have an economy by the time we're finished. Yeah. I think that's an appropriate role for the federal government.
Yeah, I guess I'm trying to drill down a bit into what specifics those who are affected right now are looking for from the government, because we keep asking, when is help coming and in what form? And I've noticed the past few times that the Prime Minister has been asked, particularly where the oil patch is concerned, he has grouped the industry with airlines, with tourism, saying, there are industries more particularly hit. We will have to do more, but we don't get a lot of specifics. And he often talks about the workers affected versus producers. We know Premier Kenney, for example, has very specifically said producers will need help, a backstop where liquidity is concerned. I haven't yet heard confirmation of that from the federal government. Just wondering if you're getting any more specifics.
Well, I think it's interesting that one of the things that we flagged to the federal government right out of the gate was trying to get the credit markets and commercial paper markets moving so that we can actually trade and do our banking and the financial management. That affects essentially every industry across the board. But for some companies, clearly, they're struggling to be able to get the credit lines and such to be able to move through this. And so it just depends on where you're at. But this is going to be a huge squeeze on how much capability and financial strength companies have. And so there's going to be specific needs within the industry to look for financial support to be able to get through this.
And Mr. Little, when you look at the industry more broadly, just beyond even in your own particular company, we are seeing some of those prices that, historical lows. I'm wondering what you are, I guess, thinking, or how you would characterize the future of the industry right now.
Well, one thing that's very clear is that no matter where you are on the globe, this price is a huge hit to the financial position, whether it's Saudi Arabia, Russia, the United States, or Canada and the Canadian producers. So this isn't sustainable. And so we've had a huge flux in demand. There's estimates that demand has come off from something like 100 million barrels a day, and it will drop in April by 10 to 15 million barrels a day. So we've lost 10 to 15% of the demand. And at the same time, you've had Russia and Saudi Arabia increasing their production. So there's some estimates that we could be literally overproducing by 20 million barrels a day. That sent the price down to historic lows, and you're seeing producers start to shut in. In one of our announcements, we talked about taking one of our trains at Fort Hills offline, and I think you'll see this globally. My understanding is Russia's having a hard time pushing all the crude into China. Why? China doesn't need it all. They've just gone through this, and their economy and demand is down as well. So I think that at some point, this market has to come into balance. When the inventories fill up, the next day, the market will be in balance. Why? Because there's no place to put crude. So this is just inevitable. And then the question is okay, well, then how do we move forward from there and get back to what we view as a normal market?
And how do you think that will happen?
Well, I think, first of all, we're going to see demand globally go up. And here in Canada, we've already started to see demand decline at the retail stations and such. Why? Because people are self-isolating, which is great. We want them to self-isolate because step one is deal with the health crisis. And then as people get back to their normal lives and come out of their homes and start doing all the things, we'll see demand come back. We'll be able to increase the refinery runs, provide more product to the end consumer, and then the demand for crude oil will start to return. Whether Saudi and Russia continue to overproduce, that's another issue. But if it happens, you'll start to see fundamental changes in some areas like shale production. A lot of the activity there is already stopped. And it has high decline rates. So there'll be some fundamentals in the business that will start driving down the supply.
Okay, I have to leave it there. I'm out of time. Mr. Little, thanks very much for your time this evening. Really appreciate it.
Great. Thanks for having me.
Mark Little is the president and CEO of Suncor. Hi, I'm Vashi Capellos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video.